When it comes to old age security recovery tax, there's a lot of confusion around it. And this week, I got an email from one of our viewers that clearly explained it. So I want to go through the email and give some feedback and next steps to help you make sure you get all the old age security that you deserve. The email was from Rick. So Rick, thanks for sending in the email with great information here. So I want to read through it and then I'll give some feedback on it based on what Rick said and also some feedback from my side. Let's use this example. If someone wishes to start their old age security in 2025, but they made $200,000 in both 2023 and 2024, however, their income in 2025 will only be $85,000. They turn 65 on January 15th of 2025, so will collect their first OAS payment in February. When CRA calculates their old age security payment for February to June, they will calculate their old age security recovery tax, which is simply withholding tax, correct, based on their higher income in 2023. Then in July 2025 to June 2026, the OAS recovery tax, again withholding tax, will be based on 2024's higher income. However, when the individual files their 2025 tax return, the OAS recovery tax will be calculated based on 2025 income, which is under the threshold. Again, the threshold's about 91,000 on the bottom, but 142 on the upper end. Therefore, there will be no clawback. The amount that CRA deducted from the OAS payments is treated as a tax payable at source, which a taxpayer will use to offset against taxes owed on other income or fully refunded. It is similar to the withholding tax on an RSP or RIF payment. Long story short is that an individual's net income is under the OAS threshold for 2025. None of their OAS will be subject to the clawback. The amount held from the OAS payment is fully recoverable. So Rick, this is absolutely correct because what happens is the recovery tax, OAS recovery tax, is based on the previous years or even 2 years ago. So in this scenario, he's talking about in 2025, come July, they're going to look at 2024 taxes or income because you filed your tax return. But come January of 2025, they don't know what you made in 2024 yet, so they're still looking at 2023. So that's how the recovery tax works. But again, either way, if your income is only going to be $85,000 in 2025, yes, there will be a clawback. In this case, it will be fully clawed back, but that would be credited as taxes paid, and it'll be used as a tax credit or again, fully refundable when he does his full tax return for 2025 in the spring of 2026. Now you might think, well, Adam, I don't make $200,000. Well, if you make anything above the $91,000, there could be a little bit of clawback, not full clawback, but some. So again, clawback is 15% of every dollar above the minimum threshold, which is just under $91,000. Once you hit about $142,000, $143,000, there's full clawback. So again, for someone that made $200,000, there's going to be full clawback, but it's just you're prepaying the taxes. If your income's only $85,000, you may get a lot of your old age security. Now, my one caveat here is that when you put together a retirement plan and you say, look, I'm going to collect old age security and it's going to be $8,000 this year, you're kind of relying on that $8,000. So if it's not actually coming in, you have a cash flow problem. And while it's not really an income problem, because you will get that money eventually, you don't have the cash flow now. So that extra $700 or so every single month isn't coming into your pocket. Thus, you don't have that money to put food on the table, go traveling or whatever you're doing. So yes, you will get that money eventually, but on the day-to-day, month-to-month in 2025, you're not receiving any of it. Or if your income's less than $200,000, you're not receiving all of it. So that is something to consider. It's not lost money or money gone forever, but it is in 2025. You could defer your old age security and that way you don't have to deal with all this stuff. Just when you apply it and start collecting it, you're actually going to get it. Or if you want to do what Rick's talked about here, which is I'm going to start it right away. And yes, I made too much the last few years, so it's going to be fully clawed back, but I'm going to get it back eventually. You just have to come up with another way to draw that income out because again, you need that income for the tax year. So where are you getting that extra income from? When it comes to building a sound retirement plan, it's really important to understand where exactly your money needs to be coming from. And oftentimes, especially like if we build a retirement plan and we show, look, you're going to get your old age security, it will get to you. It's just not getting to you till 2026 because you're going to be fully clawed back. It makes it tough from a cash flow position. So as you sit down with your financial planner and say, look, I'm going to start my CPP and old age security next year. But if your old age security is going to be clawed back, you need to kind of manipulate. Maybe you pull money out of your tax-free savings account throughout the year, replace it in lieu of essentially your old age security. Then when you get your tax refund in 2026, for all the old age security clawback that you had, you top up your TFSA. So that could be one strategy that you use. There's many different strategies that you could use. That would be probably the easiest, cleanest one. But again, then you got to prepare your tax-free savings account to start drawing money out of it. The benefit with CPP and old age security is you don't have to worry about selling stocks or investments or mutual funds or whatever to get that income. It's coming in no matter what the stock market is doing. You don't have to time the market or stress about that. That's one of the benefits of deferring these items till 70, because later in life, you don't have to worry about stock market corrections and ups and downs and managing your money and all that. Let the government take care of that. You get that paycheck, it's adjusted to inflation, it's a beautiful thing. Rick does mention in his email too, which is a great resource. There's a federal worksheet called 5000-D1, and we'll link that below. And you can use that worksheet to work out your old age security clawback or recovery tax. So take a look at that. If you're someone that thinks they might fall into a recovery tax situation, you can work through that worksheet to figure out where exactly you land based on all the income sources that you have. Again, a lot of the free online tax calculators and tax programs have this as well. You can add it in when you're doing your tax filing to see what it looks like for your tax return. So as you prepare for retirement and think about old age security, when's the best time to take it? Will I get it? This is just something to keep in mind. If you do run into old age security clawback, or recovery tax is called, you may end up getting all that money back. Again, depending on your income. But if you're someone that had a large income the year before you start old age security, even possibly 2 years before, just be aware that you may not get all your old age security up front. And if that's a concern to you, then you need to figure out either an alternative solution, like pulling that money from a TFSA and topping it up with your tax refund down the road, or look to defer your old age security, get that bump. Again, deferring your old age security past 65, you get 0.6% more every single month. So there is a benefit to deferring your old age security. It also simplifies things because you're not kind of relying on it, but manipulating things along the way. You can create a proper tax plan, maybe drawing more from your RIF account in the meantime, and worry about your old age security at a later date. So either way, there's not a right or wrong way to do it. Just make sure you have a clear plan that actually lines up with the way that your cash flow will be coming in. Because as I know, and I see it day in, day out, your cash flow is king in retirement. You need to know how much and where it comes from so you can prepare properly so that you can make sure you enjoy retirement, especially those go-go years of retirement when you're healthy, you can travel, and you can do the things you want. If you're not already subscribed to the channel, hit the subscribe button, join the community. We do 2 of these videos every single week around retirement, tax, and estate planning for Canadians. And if you want to watch another video on old age security, check this one out.